Welcome to the Swing Trading with Cycles channel. We're going to do our update on crude oil today. We had that big gap up, I think it was last week, off of the news. And that actually, it sets up a really interesting situation here. So welcome. Definitely take a look at the pinned comment. You'll see links to some previous playlists and also some fundamentals. So, and when I say fundamentals, I mean fundamentals of price action, right? So understanding swing highs, like this is a swing high, understanding swing lows, this is a swing low, understanding how to incorporate cycles into your price action analysis. But this allows you to understand what is happening right now. It's not about trying to predict the future. That is not helpful or a way to be consistent. And so we had this huge gap up, great. And since that gap, we've been consolidating literally inside the same range. So this is WTI here. So gapped up, made a high at 81.51, and the low on that day was 79.05. So the last 4 trading days, we have just been inside that range. And if you think about it from a cycle perspective, we were already off of a swing low here on day 30. So that gap up, well, we actually made a higher high the next day. That was day 11 of the daily cycle, and we're now on day 14. That's important in terms of contextualizing the price action because we've been in this sideways grind for so long. But look at what's happened. You've had your high on day 29, you had your high on day 21. This could be our high on day 11, which would be pretty bearish. That would mean it's going to be left translated if it's only day 14. Doesn't mean it has to fall for a certain number of days, etc. But having your high on day 11 for a cycle that usually lasts in the 30, like at least 30 days, that's not a good sign, right? It means you could decline for another 20 days. Most importantly, looking at the price action, again, a move below 79.05 would suggest we're going to fill this gap, right? Or I should say it increases the odds that we're going to fill this gap. Also notice how precariously we are perched above the 10-period moving average. All of those things point to signs that we come back and check this. Now, if we rocket back up, who knows, right? Like we have to see what price does if and when it does fill this gap. But going below this level, that 79, again, that 79.05 level increases the odds. Of course, you could see a false breakdown there. You want like these trades are high risk as well. That said, if we think about what this specific daily candle is doing, we're talking here on a Monday. We made a higher high, and now we're threatening to make a lower low. And so this is definitely a bearish setup that suggests that it wants to at least test that 79 area. And the last thing I'll say is, remember, we still are below this $83 level that has been a ceiling that we've been talking about on these videos. So that's important to think about. That gap up, while it's great and it feels emotional, it's still below a ceiling of resistance. And again, we've been consolidating the last few days, now threatening to break lower in the range. So all you have to do is watch this, see how this plays out to understand what side of the trade you want to get on. Obviously, right now, the odds are favored downside. And if we think about the weekly, how we're shaping up on the weekly chart, you can see it's an inside week. And so that level on the daily, if we broke that low here, would also be a weekly low because that's the low from last week. So that's where the charts coincide in that regard. And you can see that gap is also a weekly gap. And so this is setting up the conditions for a bearish weekly cycle as well. I mean, look at the way these cycles have been moving so far. Just an incredible chop on the weekly chart, on the daily chart. And we'll look at XLE really quickly. A similar picture in the sense that, and what we, for the sake of brevity, I won't go through all the names here, but similar idea. This is a proxy, gapped up, made that highest high, I should say, on day 12. That was the day of the gap, and then the next day a big rejection. Again, this is a swing high. Watch that video. It's give yourself that opportunity to learn that. Once we went below that low and we closed below it appreciably, we did try to rally the next day, but it was just an inside day. So really just chop inside this red candle now. Again, setting up downside. In the case of XLE, it's a move below, call it, $84, right? And again, also precariously perched above the 10-day moving average, which generally kind of hugs price a little bit. And same kind of situation on the weekly chart, that low on the daily will create a weekly move. And if we look at the monthly, we didn't look at that for oil actually. It's still obviously super early in the month, but right now it's just an inside candle for the monthly, so not a lot happening there in terms of signal. If we look at some of these other names, let's just look at like OIH. Is that like so that one, very similar picture, except it's made. So this one is, I would say, weaker than XLE because you can see we're much closer to making a swing high on the weekly chart. So OIH below 277.99, so call it 278, is a weekly swing high, and we're not that far from there now. So that's an important level to be aware of. We of course talked about Devon, which has been, you know, a big dog in terms of underperforming. So we don't need to go through that one. What else? XOP, let's look at that. That tends to be different. So XOP actually doesn't look quite as weak right now. So you can look on the daily chart. It's the same picture though. Has to stay above, call it 128.5. That also would be a check back to the 10-day moving average, like a lot of these things, and also threatening a weekly swing high in that condition as well. So that's XOP. I think that's a good I mean, let's look at VLO, I guess, to close this out. So VLO, wow, has been like just a chop fest on that weekly chart. That was week 11. Wow, so not really no big advantage here for VLO. I mean, look at these last 3 months of just like inside the range of January, right? Like that's all this has been. Let's look at what that looks like on the quarterly, right? So big quarterly inside candle so far, which was just in the previous quarterly candle made just a slight higher high. All of this is actually inside the range of the April. So that's the Q2 2022 candle. So that's not a whole lot happening in terms of that trade, even from a long-term perspective to some degree. Obviously much closer to the highs. And it does pay a dividend. What is that? 3%? So that's important to know about. So that's the smattering of names. We've got to watch, like, again, the condition is actually very clear. Let's look at Brent really quickly. Same idea, different levels. So for Brent, you know, a move below 83.55 is what threatens to fill the gap here. And again, for Brent, that ceiling has been around 88. You can see the gap got to 86. So $3 below that sort of ceiling of resistance, or $2 below that ceiling of resistance that we've been seeing previously. So important to keep that in mind. Don't get too excited when you see price action make a move like that. That said, it's CPI week, so we're going to see some volatility. And, you know, it's going to be pretty clear which way we resolve by the end of this week is my guess. So that's the update on crude oil. We looked at the WTI and we looked at Brent and some of the other names as well. Thanks for watching.